Hello guys, this is Roberto Hernandez and this is my final presentation for accounting. Right now I can't see my face and it's very weird for me to give a presentation without seeing my face. So I created for my entrepreneurship project, I did something new with my Zoom camera. So I'm right here, I'm gonna use this method to show my face. I don't know why anyone could wanted to see my face, but it's over here. But I'm not gonna use it in very much, but in this way I'm gonna show you my project in general. And I'm sorry if it's not the best thing in life, but I didn't have any help for filming, so I'm gonna do it this way with my Word presentation, with my accounts and what the transactions of the month were. And I have an Excel document with all the transactions I use for the 2 months and the income statements. The financial statements. Sorry. So I think I'm gonna get started with this presentation. One more time, I apologize like this way. I hope it works for everyone, and I'm gonna try to explain myself the best I can. Okay. Okay. This the first. I'm the owner, Roberto Hernandez, of Fastory. It's a delivery service. Fastory are a combination of two words, of fast, and the RY is of delivery, so Fastory, okay? There's revenue sources and revenue streams. The revenue sources are from guests and people asking for delivery, and the revenue streams are for the delivery fees and sales, okay? So Roberto Hernandez opened Fastory, a delivery service that is available all year long, and it works for people of all ages that are willing to buy something that is available in their cities, but cannot go to the store to make the purchase. Or simply if they don't want to go out of their houses to go to the store or whatever, we could take it for them, okay? The revenue streams include the delivery fees and sales that are made from the physical store, or that are also offered for buying it there or sending it home, because we're a delivery service. We can take you home our products as well. Then the charts of accounts of Fastory operations are provided below. This is a chart of accounts that Fastory delivery service used in this project. So I'm sorry if this moves a little bit, but I'm doing my best to show you everything. These were my assets from cash, accounts receivable, office supplies, supplies for sale, cleaning supplies, prepaid insurance, truck, the accumulated depreciation of the truck, motorcycle, its depreciation, and a storage container. I also bought a sound system for the business, so I also added that asset as well. I have some liabilities, which is the accounts payable and wages payable. I have the owner's equity, which is my capital, the drawings, and the income summary. I have all my expenses, which are linked with the assets, so I'm not gonna read those. And the revenues, I have two streams of revenues, as I already mentioned, which are the fees and the sales revenue. I hope this looks good, so I could get started in some way with the first month. All these projects started on January 1st of 2021. So I think everything looks all right. So I'm gonna start. In January 1st, I opened a bank account and deposit 10,000 for the business. Okay, which this is very simple, Professor. I just debited cash 10,000 and credited Hernandez Capital for 10,000. Okay, I'm not gonna do this every single transaction, because there's 30 transactions in 1 month and then 28 in the other, because it's February. So it's gonna be very long to show each and every one in every single transaction. So I'm gonna read all what happened on the month, and then I'm gonna show the Excel. But for example, for the first day of the 10,000 deposit in the account, I can show that in my assets in the first day, all the numbers that are the sides of the chart are the day, as you can see there, are the day. Okay, let me get this a little bit bigger so you can see the quantity below that. Okay. You can see the assets, you can see the 10,000, and then we go, well, let me show you first everything. In the left corner, we have the assets. In the middle, we have liabilities, and then we have owner's equity divided. In the owner's equity, we have revenue and we have expenses. Okay, this looks pretty big. It took me a lot of time, but I think it looks really nice and it's very efficient. Well, in the first day, I increased 10,000 in the business, and then in the owner's capital, I also got 10,000. Okay. Then in some and then days after, I purchased a truck for 10,000 on account that has an estimated useful life of 5 years and has a salvage value of 2,500. This means that I'm gonna sell it after the 5 years on 2,500. Then I had to hire a friend to help me with the delivery. So we bought a motorcycle. Well, I bought a motorcycle for 4,000 with an estimated useful life of 3 years and a salvage value of 1,000. Then on the day 3, I received my first money for delivery services of 300. Day 4, I paid the rent. Then I received some more cash. Then I bought some office supplies, bought supplies for sale on account, bought cleaning supplies, payment for insurance, delivery fees for service, received 800 for supply sales, bought supplies for sale. And well, I'm not gonna read each and every one of this. You can see it over there, but I would like to show you some transactions. So for example, let's see day 3. Well, day 4, I paid rent for the month. So we go to the Excel. When go to assets on day 4, we can see day 4, 1,000 on the credit side of the cash. So if we go to expenses, we should see that in rent, I have in the debit side 1,000. This is very simple, but I just want to show in sometimes that what happened and what accounts are affected, obviously. I didn't saw the to attach files in the final link thing in the Blackboard. So that's why I'm showing all this, because maybe the Mr. Takach is not watching these accounts, or not for now. All this happened on the first month. So let me show you a little bit what happened. So this is what happened. You can pause the video if you want to, Mr. Takach, to see what happened. And I'm gonna show you the Excel so you can see everything of the accounts. These are the assets. You can pause the video wherever you want. These are the cash. These are the assets, cash, the supplies for sale. These are the truck, motorcycle, the insurance, the accounts receivable, sound system, and the total. We go to liabilities. We have the accounts payable and wages payable, which I don't have anything. But in the accounts payable, you can pause the video anywhere you want. The owner's equity, I invest 10,000 the first day and I didn't invest anything else. And I had a drawing of 80 bucks. I don't know why, but I have there. Well, this is not the income summary. It just helped me to, well, it's the income summary. It helped me to get the total of 20,000. Well, a total of 9,920. If we add the balance of the liabilities, which is 10,800, we get a total of 20,170. And if we go to the assets, we should have the same quantity of the other side. And we have a total of 20,170. And you could see, if I click on the amount, you can see it's a formula. It's not that I type it. And if we get into here, we can see that is a formula as well. The same thing happened in February. I don't have that much time to show you everything as well, but you can see in February you can pause the video, Mr. Takach, if you want to see what happened. And then I'm gonna show you the Excel. In here I put it what I show you in the Excel. I have February, we have the assets, we have supplies for sale, the truck, motorcycle, insurance, the accounts receivable, sound system. I add the garage container. It had a total of $26,020. The liabilities, I rested 800 of what I meant to pay, with a total of 10,000. The owner's equity increased 6,000. The drawing stayed the same, and a balance of 15,920. I had a net income of $100 on this month on the balance. And I have 1 minute left, so I'm gonna show you the income statements really quick of the 2 months. I have the income statement of both months right here. I had the revenues and the supply sales. I have the expenses, and I have a total in the first month of 6,200 debits and 5,650 credits, with a net loss of 550. In the second month, I have a net income of 100. Then, I rest the accumulated depreciation on the second month, but these are the total assets that I have the first month, 20,170, and the total liabilities and owner's equity. At the end, on the balance sheet of both months, you can see that in total I got in cash. Well, my total current assets were $20,170. My total liabilities were of 10,800. My total of owner's equity were of 9,370, and the total of liabilities and and the total of liabilities and owner's equities were of the same thing of the assets in the other month as well, with the difference because we rested some other things that I cannot change, that I show you right now, but you can see all my work right here. Thanks for watching. Hope you understand everything. Thank you.